All right, everybody. It's 9:15. Andrew Pawielski here, senior broker with Daniels Trading. Going to be talking about obviously the market dimensions advisory, the technical tools that I use here, TAS Market Profile, Sierra Charts, Jigsaw. But we're going to switch gears a little bit and talk a little bit more about seasonal spread trades. My partner here at the firm, Brian Cullen at the trade desk, among a couple other guys, we obviously work here, started kind of trying to formulate a little bit more of a focused newsletter on seasonal spreads. This is something that I've been working on for a long time using the TAS tools. So we're not going to talk too much about the newsletter or ideas, but just kind of how you can kind of take some ideas of basically anytime there's a chart that's tradable market, how to put some tools on there to trade from it. So a lot of the same process that we go through on futures chart. This is just another means of participating in a different style or a different environment. So we do need to show a quick risk disclosure here. So check this out. We're going to go through some PowerPoint slides, and then we'll just dive into some of the resources that I use and answer some questions. And the idea is just to watch stuff like this, get an idea of what I'm doing, and then hopefully join the community here at Daniels Trading, get a trading account, get access to these markets, join MDA, so you can see the daily streams and tools that I use here and work together. So this is my contact information. If I've never spoken to you, reach out to me, shoot me an email, tell me what you've been doing, how I can maybe help you with your trading, the good and the bad things that maybe you've picked up along the way. If you're already working here with somebody at Daniels Trading, that's great. Everyone here will take care of you at the same capacity. If you do join MDA, that's a way for you to communicate with me. I've kind of moved from pretty much the industry entire of broker-assisted arrangements. Obviously, that's something I do, but really focus a lot of my attention to this room where I can speak a message that hits a large audience and then individually work with you about your trading in your account so you can pull the trigger, you can trade, you control your account, you control your money, so you can do this at the slotted time frames that you're available to trade. So I will throw this link in here. This is a previous PowerPoint that I've done kind of focusing on the seasonal spread trader. That's the kind of beta version product that, again, we're trying to launch, and it's been very active up front. There's been kind of a little pause in this next seasonal window here, but we anticipate some trade ideas coming in, some of the stuff that we're going to probably talk about today. Again, if you're watching this on GoToMeeting, I have a YouTube page where you can subscribe. If you go to YouTube and just type in Market Dimensions Advisory, there's lots of live stream recordings there for a long period of time. So sometimes people said they're too long, but you really, at the beginning of those live stream replays, you'll see kind of the steps we go through, the analysis that we go through with the tools, and then depending if you know it was a wild day, go back and watch that video and check it out. But also a lot of resources and education on TAS tools, on scanner, on market profile, on terminology, just core things that are good for you to maybe review and just learn a little bit more about me and my take on it. So today this is an agenda to talk about seasonal spread trader, the tools of FST, look at seasonal windows. So kind of an agenda that's really not in play at this moment. But these are the tools in terms of spread trading that I will use to kind of create the life of a trade. So the whole idea is idea generation. And regarding seasonal windows and how those markets operate, it's something a year in and a year out. There's these different spreads, calendar spreads between the futures markets. You know, July versus December, a lot of different setups of all the commodities. More research and seasonal algo were designed, and they're subscription based, so I can't give you access to those, but I can talk about their site and how we use them. It's a very inexpensive subscription, in my opinion, that gives you a resource of tools and information. They do a lot of the scrubbing work of potential windows and opportunities that are in play. So we lean on that for some of the idea generation, seasonal algo, and MRCI. So what I'll do is just kind of go through these websites real quick, and then we can start looking at specific strategies. So when you get in, you log into more research, they have all this information here on the left-hand side that's going to talk about October trades, November trades, seasonals. They do flat price futures. So they basically run back testing on the time frames and say, hey, this is the most opportunistic maybe spread to look at this time frame. If you look at seasonal algo, you can build your spreads. They have a scanner, a seasonal kind of scanner to show you what markets. You can change some of these filters around to see kind of what's in play. They have their kind of some recommended seasonals that are in play. This is for October. You can go to November. You can go back and flip these around. This is the starting point of trying to, and if you're new to seasonal trading to begin with, obviously there are some other ones like that year in, year out that I always talk about. So like December 19 versus December 2000 crude oil, that's always going to be in play. July versus December grain contracts, those are what's being harvested versus what's being planted for next season. A lot of these same spreads year in and year out, but they're highlighting some grain spreads. We have energy spreads, a lot of different ones. So what I try to do, and when we do the seasonal spread trader, is you're going to have to do some legwork, going through to see what specific markets are those in line with maybe the current trends of the flat price future. They have all these columns that can go through and explain what they are, best, worst drawdowns within those times. So this is where we spend our time looking for some of these ideas. So if you look for seasonal, that's seasonal spread. We look for seasonal spreads for November. You're going to get a list, their entry, their exit, what they over the last years during this time frame, if it's won or if it's lost, average profit, average loss. So again, these can be a little misleading in terms of the number of it's not guaranteed, and you got to hold it for that time frame. This could be the exception to the rule. So past performance is not indicative of future performance, of course, but the way I like to do it is see kind of what a historical price pattern is. And if you click on this March versus Jan natural gas, you can start looking at some of these charts and see that they anticipate during this window, this 15-year average, this market moves back through parity to higher. So this is the kind of the injection season of oil and gas, where they're injecting and storing and heading in, or withdrawing from their injection and storing, that they'll start withdrawing. And this is probably bullish due to if we have enough reserve, how cold it's going to be, a lot of weather scenarios coming in play. So that's kind of the story of why it's a seasonal. And then they give you a specific time frame to start looking at. There's a lot of different write-ups over here on the left that will be in play. So what I would do is that then you see kind of this idea of March versus Jan, you can start looking at different energy spreads. They have a May versus July that's in play for October. We were looking at November there. So let's look at November here. I had seasonal algo. They have a June versus July. It's not considered one of their favorites, but there's a lot of different ways you can go. You can actually go to analyze, build, and so this might not be a lot of volume in these contracts right now in terms of the spread volume. These are definitely let's see, buy March, sell Jan. All right, so there's a couple things to note in terms of the way these charts work. So sometimes they'll put the front month first, buying March, selling Jan, of what the buy is. Some systems require the front month to come first, selling Jan. So they can be a little inverted, and that's like the number one thing that we've talked about. I've talked about with people that are trying to do this on their own. If you look at this chart, you'll see that we're working to zero, and this is an upward sloping. Now that we're looking on the seasonal algo, you can see we're working zero, we're above zero. So it's a little inverted, and this is where some of the experience of using these tools will come in to help you. So you always kind of have to have your baseline. I usually use zero as that baseline. Which direction do we need to move to make it zero? So on this seasonal algo, we see that zero's here, and historically we see that this is kind of it's the same information. So yes, we're moving into the same area. So once you kind of get into the seasonal algo, there's a couple other interactive charts that you can make this interactive. You can draw stochastics, moving averages, draw on these charts. I don't actively do that very much within a lot of the updates that I make, but it's got all these tools when here, and this is just a browser-based website, so it's great. You can go into back testing and combinations and curves, and there's way more information than we can talk about. But typically, what I'm looking for is just kind of these historical price patterns that it's given us the idea of like, hey, this is going to be potentially bearish. There's nothing guaranteed. There's always a wrench thrown in trades all the time. So if it's not a very cold, we don't follow a lot of the fundamentals that we see here, could differently change. But now we're going to so now that we have kind of a chart to look at, we're going to just kind of go to our quote board on the Okay, so we got the chart added. We're not going to see maybe as much of the historic volume as we would on all right, this actually brought up the wrong chart. So one moment. All right, 1 minute. Let me get the proper chart here real quick. All right, so thanks for bearing with me here. Just trying to show you this process we go through, and then we can. All right, so this is a weekly chart. So what I try to do is we've got a little bit of a story here of the MRCI versus January. This is moving through zero, kind of bullishness. Again, this is putting March 1st. As we mentioned, some of the charts, we're going to put January 1st because it's the front month, so it'll be inverted. That's the number one misstep that people have when trying to look at multiple setups. So this is a move through zero. So we are seeing a few things when we look at this chart here on the DT Pro. We have kind of this downward sloping bigger picture here, weekly move. But we broke out of this range and made this bullish move back to kind of this range, these previous highs. Or this, I'm sorry, this kind of technical area here around 230. And then those that are familiar with MDA and some of the trades that we talked about in the seasonal spread, we participated in kind of a bullish and bearish trade on different time frames a while back. So you'll see a lot of these spreads come into play with just natural gas and specifically, but then what contract months. So hopefully I'm not losing anybody here, but if you have any specific questions, throw them in the chat box. So once we get to this point, a chart's a chart. We'll start using our tools, our information. We have a background of knowing that maybe what the historical price point would be, the historical price pattern would be. We see a downward sloping area. So here we have 179 price area as top boxes. So this is kind of a pivot spot. So this would be maybe conservative. Nothing's in terms of conservative risk versus reward, but this would be kind of a pivot trade idea based on what we're seeing to enter this around 179. Again, you might be fighting some current momentum, but if it's going to kind of keep this downward sloping area, would be an idea to lean on for resistance to trade. We see a lot of volume in this channel below around this 10 cents. If we start trading through there, that's going to be the bullish momentum we need to work lower. So you need to realize that this is held on a long scale basis all the way back to May. So what's going to happen now? Why would we budge through it now? Well, the weather will play a certain factor in this. A lot of different other factors. So what I will try to do is start at the weekly and then whittle down to the daily, get a different view of things. We see we had this bullish move. We pulled back into kind of this previous high volume spot from a previous profile. That's where we found support. We're currently above top boxes. So, selling this right now is you're kind of counter to the kind of the current bullish trend. But again, if you're leaning on kind of a top box here to pivot, that would be the best entry in a scenario if we do break back to zero to get in. But you have to know that the disadvantage of that is that's even more bullish momentum on something that's showing some signs of bullishness here. So on the story of this trade, again, the entries is in November. We want to start looking at things in advance. So if you can front run something or have some levels that come into play, you're kind of already in maybe start of that trend before the seasonal window opens. So really want to wait and see if this thing can get through kind of this chunk of volume and do a momentum entry to the downside. So what can we infer from a 4-hour time frame? We're seeing that we are close to 30% on Navigator, which is the spot where you kind of avoid some breakouts. If it's at 40%, then it's overbought. We've had a previous profile high volume spot that's in line with that weekly top. But we're getting distributions here, and maybe we will start working our way back lower, and we will watch this point of control as 143 and then this 137 area. So again, this is a spread. It's going to reduce your margins. Why do we trade spreads? It allows you to participate in things on a longer time scale, in my opinion. It reduces some of the daily volatility. You're long one, you're short another here market, so that's the reason of the reduced margins. And it can allow you to, on a market, like crude oil or natural gas, that can RBOB, especially those energy markets, while we focus on it, even the cattle markets where you have, these $1,000 moves in the course of a day or two that could go against you. You can participate on a little longer time horizon on weekly, daily charts, 4 hours, without as much potentially risk in play per one lot basis. A lot of people will put maybe 5 spreads on because of that reduced margin and know that there's going to be a longer trade duration here to follow that pattern. So this is the same in basics as just a natural gas contract, $4.20 per tick. So if moving 20 ticks is not exciting for you on a one lot basis, and most people it's not, do 10 of them, do 5 of them, whatever floats your boat. You can build a level, and then once you have multi lots, you can kind of then take advantage of some of that multi lot trading of different targets, control, obviously different risk parameters. You are extending your leverage, of course. So again, if you put 4 on, there's 4 times the risk, but also 4 times the reward. So that's the process that I go through when you see an update that goes out from myself or from Brian of these trading ideas. We're taking them from seasonal windows in play, looking at the price patterns, overlaying our TAS analytics to try to scrub down, because the seasonal windows will only just show buy at this time, sell this time, sell at this time, buy at this time, without a stop. And that's just not appealing to a trader. You need to have some risk parameters, you need to have some targets. So this slide was thrown in here. Life is inherently risky. There's only one big risk you should avoid at all costs, and that is the risk of doing nothing. I think that's a great quote for traders that I talk to on a daily basis. They just kind of paralysis analysis, teach me, give me your education, and then never really execute anything. So I wanted to kind of talk about seasonal spreads here today. So if that seems like something you're interested in and you want to talk further, that was the goal of today's webinar. These tools can be applied to those markets and allow you to better scrub down your entry, your risk, your targets, and things like that. And it's really the same process of what we're doing on a daily on all these tools on any market as it is. So why not have another set of potential trade ideas? So we're getting a lot of questions for people wanting to look at what we're doing now in the market. So we'll go through kind of some of that real quick. In the premium room, we were talking about this 30-minute time frame, this 87, 86 level, looking for bears to have their chance to work our way back to 80s. This 84 level is kind of where we really got this bullish move yesterday. So for those that are getting the MDA updates, we called for a buy zone on this hourly time frame on sellers trying to defend it here with a buy box top breakout here. So we're seeing sellers that were trying to defend the market using this tool. So something like this, a bunch of them above or below a top box. So TAS imbalanced breakout with sellers on the jigsaw tool that if we did hit that price point could be a sign of a breakout. And we had some upside targeting in play through 3,000 and some other objectives. And then we got this big hourly bar where we worked our way into the 3,000, sent the update, anywhere from 15 to 20 point move for those that participated. You're still hanging on from that, then you're leaning on kind of this 82 area to hold, and it has not traded back into that range yet. And now we're working our way back into these boxes. 15-minute time frame is what we were looking at this morning in the room as kind of a potential break. We broke this 92 3/4. We saw sellers trying to defend it. So if we start working our way through 94 1/4, we could see some more further upside. And this is the weekly chart. It's outlining the time that we've spent in the market and the number of contracts traded, and we traded the most contracts just ahead of this 3,000 number, psychological number, but we spent the most time down here, so a bit of a divergence. Not always the case. We see last week we had a similar situation, but usually they pretty hand in hand. We spent the most time there, we're probably going to trade the most contracts there, so when they don't, that's a significant volume level. So we're heading into a significant volume level that was defended, so maybe that's going to hold here. If that does break, maybe that'll be the catalyst to get back into these 30-15s, 30-20s. Couple interesting things on this daily chart. We have these profiles. Left-hand side is day session only, so just that 8:30 to 3:15. Right-hand side, the extended session, that 5 p.m. to the following 4 p.m. 23-hour session of Globex. Allows us to see kind of day session gaps. We have this gap to the downside. If we do get back below kind of 60s, maybe down into these 50 area, rejected that potential scenario yesterday, and we have an upside target. Our next upside target is 30-12/4. But on the Globex side, we have this naked POC at 30-04 3/4. So essentially, those are just there of levels of significance where we spend a lot of time that have not yet been breached, and it's very interesting that that was there and we weren't able to break it yet. So this next test through 30-04 look for this run to 30-12. So again, these are the tools that we try to use along with kind of the short-term jigsaw to see where the buying and selling is actually occurring, because this allows you to see inside the bar. And then the TAS tools to kind of give you those imbalance levels of where we might see that momentum pick up. So that's what we use in the MDA room. Focus heavily on volume analysis, market profile, equities, oil and gas, gold, a lot of different markets there. All right, so getting a lot of questions here about market specifics, and I appreciate that, but again, this is just kind of trying to do some basics here to give people an idea of what we're doing. If you're wanting to get access to kind of what I'm doing, reach out to me, A. Pawielski at Daniels Trading. Give me a phone call. Tell me what you're into. Go to danielstrading.com/MDA. There's 2 5-hour courses there that explain a lot of these market profile basics and all that information. Go to my YouTube page. I've got lots of live streams there talking about these. The goal is to kind of show you the tools I use. I've been in the business almost 13 years, worked with thousands of traders or prospects over that time frame. I've seen the good, the bad, the ugly, and my idea is to kind of present you with this information so you can learn it, be a long-lasting client here, and hopefully get on the right side of the market. But again, these are risky markets. There's a lot of leverage involved, so we want you to be prepared to protect yourself, and these tools can help you do that too. So thanks for attending here today. I'm going to wrap things up. Again, if you have any questions or anything reviewed, contact me directly. I'd be more than happy to speak with you. Thanks, everybody.